Good night, everyone. Thank you for joining me today. My name is Devan Arya Maulana, and we're excited to have the opportunity to speak with you about our official assessment, specifically about stages of tax determination. But before that, we would like to introduce our group members first. My name is Devan Arya Maulana.
My name is Oswald Jefferson.
My name is Aziz Syafutra Diartono.
Stefanus Raditya Alvaro Dumatubun.
Okay, and without any further ado, let's dive in and get started. So first, we need to define what are tax assessment letter, and we'll also discuss briefly about the types of tax assessment letters. So we define a tax assessment letter by a record of a company's financial information for an accounting period that can be used to describe the company's performance. The tax assessment letter is divided into four types, including the notice of tax underpayment assessment letter, the notice of additional tax underpayment assessment letter, the notice of nil tax assessment letter, and the notice of tax overpayment assessment letter. Okay, so first we will discuss about tax underpayment assessment letter. So a tax underpayment assessment letter is a tax assessment letter that determines the amount of principal tax credit, the shortfall in principal tax payment, the amount of administrative sanctions, and the total tax still owed. Usually the uh, usually Usually, tax underpayment assessment letter contains amount of tax principal owed, amount of tax credit already paid, amount of underpaid tax principal, amount of administrative sanctions, and total tax that must still be paid by the taxpayer. And uh, according to Article 13, Paragraph 1 of Law Number 6 of 1983, explains several conditions under which the Directorate General of Taxes issues an tax underpayment assessment letter. And these conditions include number one, if based on the results of an audit or other information, the tax payable has not been paid or has been underpaid. Number two, if the tax return is not submitted with the prescribed period as referred to in Article 3, Paragraph 3, and after receiving a written warning, it is still not submitted within the time specified in the warning letter. Number three, note that the deadline for submitting periodic tax returns is no later than 20 days after the end of the tax period. The annual income tax return for individual taxpayers must be submitted no later than 3 months after the end of the tax year, while the annual income tax return for corporate taxpayers must be submitted no later than 4 months after the end of the tax year. Number four, if based on the results of an audit or other information regarding value-added tax, luxury goods sales tax, it turns out that the 0% rate should not have been applied. Number five, if obligations as referred to in Article 28 concerning bookkeeping or Article 29 concerning audits are not fulfilled, so that the amount of tax payable cannot be determined. And lastly, if a taxpayer is assigned a taxpayer identification number and or is designated as a taxable entrepreneur by the tax office. Okay, next one is we have an additional tax underpayment assessment letter. So what this is a tax assessment letter containing an additional amount of tax beyond what has already been determined. This additional tax underpayment assessment letter is issued to a taxpayer if, after further investigation, it is found that there is still unpaid tax beyond the underpaid tax amount stated in the previously issued tax underpayment assessment letter. as regulated in Article 15 of the General Tax Provisions and Procedures Law. The additional tax underpayment assessment letter can be issued within 5 years after the tax liability arises or after the end of the tax period, out of the tax year or the tax year itself if new data is found that results in an increase in the amount of tax owed following an audit conducted for the issuance of the additional tax underpayment assessment letter. There is an administrative sanction imposed upon the issuance of the additional tax underpayment assessment letter, which is a penalty of 100% of the additional underpaid tax amount plus the amount of the underpaid tax stated in the additional tax underpayment assessment letter. Okay, next we have the nil tax assessment letter. It is a tax assessment letter stating that the principal tax amount is equal to the tax credit amount, or that no tax is owed and there is no tax credit. So this tax assessment letter is issued when after an audit, the the tax credit or the amount of tax payable equals tax due, or when no tax is owed and there is no tax credit or tax payment. According to Undang-Undang Nomor 6 Tahun 1983, a nil tax assessment letter is issued for number one, income tax, number two, value added tax, and number three, luxury goods sales tax. So this tax assessment letter is issued by the Directorate General of Taxes after reviewing the taxpayer's tax return. Next. Okay, lastly, we have a tax overpayment assessment letter. So what this is a tax assessment letter that determines the amount of tax overpayment due to the tax credit being greater than the tax owed or the tax that should not have been owed. So, this tax assessment letter is issued after an audit when the tax credit or the amount of tax paid is greater than the tax owed. The tax overpayment assessment letter is issued for number one, income tax, number two, value added tax, and number three, luxury goods sales tax.
Okay. So next, let me walk you through the basic steps of a tax audit and how a tax assessment letter or SKP is issued in Indonesia. Firstly, the process starts with an official document called SP2 or Surat Perintah Pemeriksaan. This is the legal order that allows the tax office to begin an audit. Next, the taxpayer is formally notified through a notification letter, better known as SPP. This must be delivered at least like 7 working days before the audit starts. Then comes the audit execution. Tax auditors examine documents, financial records, and may ask questions to understand the taxpayer's compliance. After the audit is done, the findings are discussed in a meeting with the taxpayer. This is called PAHP or Final Discussion of Audit Findings. Following that, the auditors prepare a report known as LHP or Audit Result Report. Based on this report, the tax office issues a tax assessment letter or SKP. Like Devon said earlier, there are 4 possible types: SKPK, SKPKB, SKPKBT, SKPLB, and SKPN. And now, let's talk about the timeline and your rights, our rights as a taxpayer. From the moment the SP2 is issued, The entire audit must be completed within 6 months. This deadline can only be extended under specific conditions like complexity or force majeure. Once the SKP is issued, the taxpayer has the right to respond. If you disagree with the result, you can submit an objection atau keberatan within 3 months of the SKP date. The next one is file an appeal atau banding to the tax court if the objection is rejected. Or even you can file a lawsuit or gugatan, especially in refund or procedure-related cases. These rights are protected by law, and the taxpayers are encouraged to use them if necessary. Next, I think that's all.
So let's talk about SKPKB, SKPN, and SKPLB. The first one is audit findings discussion process. And number one is notification of audit result, PHP, pemberitahuan hasil pemeriksaan. The tax auditor present findings, legal base, and propose correction calculation. Second one is taxpayer response, an opportunity for taxpayer to agree. Taxpayer can submit arguments. The third is final discussion of audit result, PAHP, pembagian akhir hasil pemeriksaan. A discussion and negotiation between the auditor and taxpayer aims to reach a mutual understanding. And the last one is minutes of the final discussion of audit result. BPA-PPPHP, berita acara pembebasan akhir hasil pemeriksaan. A document recording the conclusion of the discussion and agreed or disagreed correction serve as the basis for issuing the tax assessment letter. Next is relation of audit findings to tax decision. In point A, underpayment tax assessment letter, SKPKB, surat ketetapan pajak kurang bayar. When issued, an underpayment of tax is found, the tax due according to audit result. There are positive income correction or negative expense correction. Second is implication, the taxpayer must pay the underpaid tax plus administrative penalty. B is nil tax assessment letter, SKPN, surat ketetapan pajak nihil. When issued, no underpayment or overpayment of tax is found. The tax due according the audit result equal the tax credit or tax already paid. No significant correction. Second one is implication, confirm the tax obligation. No additional tax payment are required. And point C is overpayment tax assessment letter, SKPLB, surat ketetapan pajak lebih bayar. When issued an overpayment, second one is the tax already paid is greater than the tax due according to the audit result. Third one is there are negative income correction. The implication is the taxpayer has the right claim distribution. And last point is key takeaway. BAPPHP is a crucial. This document is vital as it records agreements and disagreements during the discussion. Second one is taxpayer rights. Taxpayers have the right to defend themselves and provide evidence throughout the discussion process. And the last one is legal consequences. Each type of tax assessment letter carries different legal and finally financial consequences for the taxpayer.
Okay, the next up is the assessment of the possibilities of a tax investigation. A tax investigation is a legal process carried out when there is a strong suspicion suspicions that a taxpayer has committed a criminal offense in the field of taxation. This process falls under the authorities of the Directorate General of Taxes, but it's conducted by civil servant investigators in collaboration with other law enforcement agencies such as the prosecutor's office and the police. After the audit, if there are any indication uh, of deliberated unlawful actions by the taxpayer to evade tax payments, the tax auditor may recommend proceeding to the investigation stage. There's indication of a tax crime, such as failing to submit a tax return within the specific time frame despite being obligated to do so, submitted a tax return that contains false or incomplete information in a resulting in a reduction of the tax that should be paid, failing to remit tax that has been withheld or collected, such as in Article 21 to 23, income tax or value added tax, using fake tax invoice to reduce the amount of tax payable, creating fictitious or fraudulent bookkeeping or financial statement to evade taxes, and lastly, refusing to be audited or obstructing the audit process. There are key elements of assessing to determine the presence of a criminal offense, such as the element of intent. Did the taxpayers deliberately conceal the information? Element of action. Was the act real or tangible, not just suspicious? Stated financial loss value. If the amount of unpaid tax exceed on a certain threshold, it may lead to further legal actions. Taxpayer behavior during the audit. Was the taxpayer cooperative and transparent or invasive? Uh, and lastly, available documents and evidence. Are they strong enough to proceed in the investigation? Finally, process if recommended for investigation. First, the auditors prepare a preliminary evidence examination proposal note P2 if there are strong indications. If approved, the process may move to the preliminary evidence examination stage. If the evidence is sufficient, the Directorate General of Taxes will issue an investigation order letter and hand the case over the prosecute office. The taxpayer can stop the investigation by paying all tax liabilities plus an omission section equals 3 times the underpaid tax amount in accordance with Article 44B of the General Tax Provisional and Procedural Laws. And once payment is complete, the investigation process can be terminated.
Okay, that's all for today. Thank you all for your attention and participation for today. Uh, if, I hope this presentation has provided you with valuable insights and a clear understanding of official assessments and tax determination stages. Uh, this is that's all from our group, and have a great day.